I was looking at the 200-day moving average on both spot gold and spot silver. So as a little bit of an update, remember, as we've talked about it, 10% above or below that 200-day moving average is a lot. And on the spot contracts, which are just contracts, we got to extreme levels. Now, frankly, we are at more reasonable levels with spot gold still about 13%, give or take a little bit, above that 200-day moving average, and spot silver in the vicinity of about 33% above that 200-day moving average. So still technically overbought positions, but we also, Kenneth and I, before we came on, I was taking a look at where, WTIC, so oil and also Brent was. Those are now, for obvious reasons, at extreme levels. And I know everybody's been feeling that at the gas pumps. Here, both in Australia, and I've spent most of my time this time in New Zealand. But gas prices here have more than doubled. And I'm sure that you guys are experiencing the same thing. And what I also thought was really interesting was looking at the stock markets and looking at Bitcoin. Those are actually well below their 200-day moving average. So just to remind everybody about that 200-day moving average, it kind of works like the rudder of a ski boat. And if the spot price is a water skier, there's only so far one way or the other that it's going to go before it comes back to that center 200-day moving average. And I know a few days ago when I looked at the extreme volatility in the spot gold market, it did kiss that. Of course, it didn't close there. So just understand that these are contracts. And I was telling Kenneth that the very first thing that I'm going to be working on when I get home is helping you understand that even more. I'm going to do a piece showing you how it was created by the governments, by Wall Street, to manage. It's a tool of perception management. It was originally created to manage how you perceive gold and silver. Because once you have it in physical form, it's really outside of their control other than emotionally. But it still is outperforming. Even that is still outperforming the rest of the markets other than oil for obvious reasons. You have some comments on that?
Yeah, I think it's going to be a very, very good piece to have, because it's the one thing that I believe we've all been trained to look at and to see value in, is those fake paper markets. And so that's, I think, when we talked about, speaking of the dime cards, that paradigm shift really comes into understanding how these contracts work and what their purpose is. And it's like you said, perception management. If they can get people to see a wild price swing up or down either direction, it can kind of steer the herd as to where they want people to go. And last week we kind of talked about it too, that it's also a way to shake out the people and not want them participating in taking back their wealth out of the system, while the central banks are buying hand over fist record amounts of physical gold to have.
Very good point.
Well, it looks like we are here and we have questions coming in. So everybody,
let's rock and roll.
Yeah, they're here for the party.
Me too. You too.
All right, great. So we have our first one here at Airborne 2 asks, Lynette, how do you feel about TIPS?
Oh, well, I think they're a joke. The tips that are supposed to keep pace with inflation, they really have not performed as anticipated, and I think they're a joke. I don't own any.
Yeah. Now, where would where did those even come from, or how did those even come about?
Well, those are shorter term bonds that are supposed to be, the interest rate is supposed to be adjusted so
Mhm.
that they beat the rate of inflation. But since it's all really manipulated anyway, and it's that rate of inflation that's a joke. I mean, when they talk about inflation, they talk about, oh, it goes up and then it comes back down. It's not the cost that goes up and then comes back down. It's the speed of the loss of your purchasing power. So I can even equate that back to the stock market, that it's a bond, right? It's based on government bonds. And they just have an adjustable interest rate. But it's really a joke, because the real trend is not what the stock market is doing, or even the spot markets in any area are doing. It's relative to the purchasing power of the consumer dollar. That is the real trend. And when you take a look at that, what you will see, you can go long term and you'll see that we've lost over, 97, 98% of our purchasing power officially. But that's really what matters to us. It's not the rate and speed of that loss, it's the loss. And interest rate moves up or down does not inhibit the loss of your purchasing power. It doesn't change it. The only way that you can truly protect it is to make sure that you have surety in food, water, energy, security, barterability, wealth preservation. That community piece is the single most important thing that we do. And shelter. You have to create that surety in all of those areas. And frankly, thousands of years of proof has shown that only gold, real gold, and real silver, not these contracts that are just trading vehicles and are designed to make the banks money and keep you away from having the physical. You have to have the physical. And that's been proven over thousands of years.
Yeah, absolutely. And you're right. It's, again, we were talking about perception management. That's really what that inflation number is too. The prices don't ever go back down. It's just the rate at which they go up can fluctuate. But every time I check, they don't include energy,
Food.
yeah, food or housing or shelter in that number anyway.
Well, they changed the formulas as well. Oh, people can't afford steak, let's put in hamburger. Oh, they can't afford hamburger, let's put in hot dogs. So, they change through hedonics and all sorts of manipulations what you're really seeing. Do you believe them against your own personal experience? Because a lot of people do. It's really interesting. But to your point, Kenneth, that is perception management.
Yeah, absolutely. And then we have Thomas Veal 3351. Do you also expect home values to drop dramatically simultaneously while gold moves towards its fundamental value?
100% I do, because real estate is a huge driver of GDP, right?
Mhm.
And when you take a look, and we can pull this chart up pretty easily, but if you take a look at the interest rates in that 40-year trend cycle going down, and the house prices, the average house price going up at that same rate, you can see the manipulation a lot more clearly. But since 2022, when the central banks raised the interest rates rather quickly, on a global basis,
Mhm.
they broke that 40-year trend cycle. That didn't disappear because they've manipulated the markets and things even more. So, yeah, 100%. What is currently severely overvalued in the real estate and what is undervalued in real sound money, physical gold and silver, 100%. There isn't even one teeny weeny itty bitty doubt in my mind about that flip flop. And yeah, I do expect them to go down dramatically. And even think about 2008. They dropped about 45%. And then the central banks came out and they said that they're going to target real estate for reflation. And so they put a floor underneath the true price of what those homes should be. And you stop and think about it. I remember, so this would have been like 1978 when I bought my first home, 3-bedroom, 2-bath, about 1,800 square feet. So, nice little starter house. And I paid $59,000 for that house at that time. And this was in Sarasota, Florida. But I also had, I think it was like 12 or 12.75% interest on that mortgage. Right. So as the interest rates have gone down, that house probably now somewhere around 500,000-ish or something like that. It's the same house. Is it really worth that much more money, or is the dollar really worth that much less? And have these prices been manipulated upward? Absolutely 100%. Because when it seems like the price of your house is going up, then what do you think? Ooh, look at how much. I mean, most people hold most of their wealth in their homes. And so they feel wealthier. A lot of times they take out more and more and more debt on the house as that inflated value rises. And, we saw what happened in 2008. And I think, I think it's going to be, well, I can't guarantee this, but we are without the same tools as far as a balance sheet, as far as the ability to print a ton of money and have it have that impact. We're at a different place. I don't think they're going to be able to do it. So, in fact, I'm 100%. I'll put my neck on the line. The answer is yes. I think there will be a dramatic drop in home prices. Having said that, you have to have a place to make your last stand. So any kind of speculation, you do whatever you're comfortable with, but that would not be my choice. However, there is part of the strategy, and Kenneth, you could probably speak to this, about how if you are creating a mortgage right now because you need a place to make your last stand or other good necessity, that you end up paying that off with, in the US, dollars that have no value. Around the world, it's a little bit different because we do in the US have an advantage in that you could take out a 30-year fixed rate mortgage, whereas I don't know of any other country where you can do that. But the strategy can still apply, because the goal is when they do that overnight revaluation, that happens 100% of the time when all confidence is lost, you would pay that mortgage off with, wherever you are in the world, that currency that has zero value. Can you address that a little bit more in the strategy?
Yeah, absolutely. So that is a fundamental part of it. History shows when we are looking at the revaluation of a currency or a reset, that banking institutions, they do things with their balance sheet. When they have active debt on there, they restructure that debt. And Lynette, when they restructure that debt, do they restructure it to be in our favor or in their favor?
Obviously, it's always in their favor.
Yeah.
And who reads that fine print? All those mortgages, if you really want that house, sign here, sign here, sign here, sign here, sign here. So just make sure that you are in a position. That's what the sound money strategy is all about, to take care of that fixed rate debt with currency that has no value whatsoever.
Correct. Yeah, you're using the bank's own deflating fiat dollars to get yourself out of that debt position, and that's the beauty of the strategy. It's the asymmetric payoff. What you could get for, so like, let's say you get 30 ounces of gold today, you only need to possibly use a couple of those ounces to extinguish that lien, and then you've got all that pristine purchasing power that you're holding in your possession outside the system in order to not only preserve your wealth, but have the opportunity to make income producing assets that neither you nor your heirs can outlive.
Yeah, what a concept.
Yeah.
Because wealth never disappears, it just shifts location. How about if this time, instead of it always shifting to the 1%, which is the setup, it shifts to the public? What a concept.
Yeah, exactly. So that is a great question, though, and speaks right to the heart of our strategy and how just we account for every possible scenario that we can, and we make sure we've got an action plan regardless of what happens out there in the world when we're going through this reset.
And keep in mind as well that the reason why physical gold and physical silver is classified as sound money is because it is above all central banks and governments' ability to inflate away, because both of those assets, both of those commodities have full usage. 33 different places or more with gold, physical gold, and 36 different places in the global economy with physical silver. That is absolute demand. That's why it's above everything. And that's why central bankers hold it, because he who holds the gold holds freedom and power. And that's why we want you to hold it as well. Let's take our freedom back. Let's take our power back. We can do this. I am so hopeful. And every time I travel and I talk to people, it makes me even more hopeful. I think we together, one person can't do it alone, but together we can do anything. So let's do it. And until next we meet, thank you so much for being here on the lives. It really is my favorite. And that's why I didn't want to miss it, even though I've been on vacation. Thank you guys so much. And until next we meet, wherever you are in the world, please be safe out there. Bye-bye.